So why did the stock market just absolutely dump today? What's going on, team? It's Ricky with TechBot Solutions, and a lot of you guys should be aware the CPI data comes out tomorrow at 8:30 a.m. Eastern Standard Time. That is 5:30 a.m. Pacific Standard Time for those here in the West Coast. We made a video earlier today. You guys absolutely killed it. I appreciate all the love and the support. I asked you in that video if you would like me to make a second video for today and break down what makes up the CPI data and what are we looking forward to tomorrow. There is no question that the expectation for tomorrow's data is bad. That's exactly why the market dropped today. The CPI data is also viewed as kind of like the inflation report. It's done once a month. It's normally anywhere from the 10th to the 13th. And this month, it is tomorrow, Tuesday. Please make sure that you are aware of this, right? This is why we uploaded yesterday's or today's earlier video. So make sure that you smash the like button on this video, because I'm going to be breaking it down, but as well as make sure you subscribe and turn on your post notifications so anytime that I upload a new video, you get alerted so you don't miss out on these updates. The White House says, and I shared this on my social media account. So again, if you guys don't follow me on Instagram, that's going to be the third link in the description. The White House says that expect inflation to be extraordinarily elevated. This is coming from the White House. I don't know if they're just trying to instill fear in people, but guess what they said? Why? Why is the expectation for this inflation report or CPI data report expected to be extraordinarily just high? They say because of Putin's war against Ukraine. My thing is accountability, right? The accountability is not there within the United States, at least not right now. You guys can share your thoughts down in the comment section. But with that being said, what is something, so even before we get into it, what is something that goes up when the market goes down? This is not an encouragement, so please don't take it as that. This is ticker symbol SQQQ. This is an inverse ETF. So this is considered a bear triple leverage ETF. It went up 7% today. It does the opposite of what the NASDAQ market does. So therefore, as the NASDAQ market is dropping, this goes up. So if you're going to be asking the question, how can I, if the market begins to drop, make money? This is an option. You should not invest into it you should not trade it if you've never partaken in it. I just want you to be aware of what goes up when the market goes down. There's an inverse ETF for every market out there, the Dow Jones and the S&P 500. So please make sure that you look a little bit more into it, or if you have any questions, just comment down below. With that being said, it's already been factored into the market that tomorrow's CPI data is going to be bad. But how is this determined? This is what I pulled up for you guys, and I am here to encourage you to do your own due diligence, right? I'm going to break it down for you in the way that I understand it, and I hope that I can really dumb it down because they make it very complicated to make sense. And the first thing is like, what makes up the CPI data? I'm a visual learner. I'm not going to sugarcoat it. I'm not going to pretend like all of this makes, that when I look at all the numbers, it's just very easy for me to make sense of. No, right? It takes time and please be aware of that. I don't want you to feel any specific way just because it doesn't make sense right away. But with that being said, I want you to understand that the CPI data, these are the 8 major groups that make up the CPI, which is the Consumer Price Index. These reports are sent once a month, and it's literally just to track inflation in these specific sectors. So month after month, the way that I want you to understand it, because this is the way that I understand it, is from the previous month, did we overall see an increase in price on average for apparel, for housing, for food and beverages, for Medicare, for recreation, right? Or recreation, my apologies, for other goods and services. And again, this is all broken down. I mean, those are the 8 major factors, right? But they are all broken down in this data, right? And the really cool thing about this is now that you understand that it's literally just the way that the feds track month after month, the specific data for those 8 major sectors, right? It goes beyond the 8 major sectors. And this is how it's broken down, right? So everything is tracked of what goes up or what goes down. So what I said in today's earlier video is I want to look at the previous month of the CPI data and make sense of it, right? A lot of you guys remember that when the month of February, right? Because these are like a month behind, meaning that right now for tomorrow, the CPI data that we're going to receive, the report, it's kind of like a progress report, right? It's for the previous quarter. Do you guys remember that in high school? The way that I view it is it's for the previous month. So it's not for the month of April, right? It's going to be for the month of March. For the month of February, it was delivered in March, and we saw on it that inflation rose a total of 7.9%. And this was huge news because this was the highest inflation has been in the past 40 years. So in my lifetime, I'm 27 years old, for those that don't know, inflation is the highest it's ever been in my lifetime. 7.9. I thought that this chart did a beautiful job kind of making sense of that. That even during 2008, right, when there was a lot of fear instilled into it, 5.3%. This goes back to 1980. I don't know. I wasn't alive in 1980, but you guys can let me know based off of your experience. With that being said, one thing that I've learned about our current, the idea of inflation, obviously it's a huge concern for the Federal Reserve, right? How do people fight back inflation? They raise interest rates. This is all we've been talking about because the Federal Reserve is raising interest rate to fight back inflation. How does that all work? And again, I really hope that this is all making sense to you because I want you to understand why. Why is inflation bad, right? And then why does the Federal Reserve raise interest rates? So the Federal Reserve raises interest rates to moderate inflation, right? So if the feds are seeing that, consumer spending is way too high, right? This is something that they have to moderate. The way that they can do this is by raising interest rates, meaning the interest rate in which someone borrows money, they make it more expensive for someone to maybe take out a loan for a house. Therefore, if interest rates are high, right? If you follow any real estate investor, they're most likely reminding you or making you aware that interest rates are going up. This makes it less attractive for people to spend money, but the housing is just an example of it. Interest rates altogether rise. So when all interest rates rise, it makes it more expensive to borrow money. So therefore, the feds hope that it encourages people to spend less, therefore fighting back inflation rate. Very simple, right? So how is it and what is it that is to be expected to be released tomorrow? So the way that I want you to view this is, right here we can see a total. I mean, we don't have the total of 12 months here, but this was the previous month, right? So we have a total of, we just have 7 here. That's the unfortunate thing. But the way that I want you to view it is once the report is released for tomorrow, we drop the last report from the previous report. Does that make sense? So we drop off the previous one and then we go into the next one. And the reason that I wanted to explain that to you is I thought that this chart did it very beautifully, where we can look back to 2021 and February of 2022. And the way that this thing works when you track inflation is that they're now going to release the month of March, but they're going to drop the month of February. So you could imagine that most likely we're going to be at a higher inflation rate of an increase of 0.4%. And I want you to also understand what are all these different increases or drops, right? How did we get to 7.9%? So this is just the increase that we've seen in the past 12 months. And again, I know it might sound super complicated, but it's not. It's really not. So when we drop the previous month, that means that we lose 0.4, right? Out of the 7.9%. But then we add on March. And the question that you should then begin to ask yourself is, well, are we going to see something higher than 0.4? And if so, then our overall, inflation rate, it's going to be higher. Or do we expect something less than 0.4? Therefore, our inflation rate should actually be less. But here are my concerns, right? So I wanted to break down this and how this is all made up. And if you go down a little bit more, right, how do they get down to the 0.08? Because last month we saw an increase of 0.8. The month of January, we saw an increase of 0.6. The month of December, we saw an increase of 0.6 as well, right? So that's month after month after month after month that we've seen continuous increase in inflation, right? Is it a possibility to see a decrease? Well, yeah, right? How do you see a decrease? Well, an example can be, you guys can see that for the month of February, I remember because I pay attention to used cars. A lot of you guys know that I buy and sell cars. When it comes down to used cars, we actually saw a drop. Let me go ahead and see where they pulled it up. Yeah, a drop of 0.2 when it comes down to how they track the average used car market. So that actually helped us. But imagine if we would have seen a drop in energy commodities, if we would have seen a drop in apparel, right? If we would have seen a drop in maybe transportation services, those would have all played a role in maybe putting us at a smaller increase than the month prior, which would have led to a less of an increase for inflation rate or an overall peak for inflation rate and maybe actually seeing a retraction. I really hope that that's actually making sense. My concern is, to make it just very simple, right? We're going to drop the previous month. So if we go back, we're going to drop the month of February, and looking back to our previous 12 months, I think it's pretty safe to say that even for our previous, 5 months, the lowest one that we've had is an increase of 0.6. So with that being said, if we're only dropping 0.4 and then we see that, based off of our previous month, we saw an increase of 0.8, and with everything that has happened between Russia and Ukraine, and also, let's not forget, right? Again, going back to this, apparel, right? What's the other one? Goods and services. What is one country that plays a huge role in our supply chain? Let's not sugarcoat it. It's China. What has China recently announced in the past month? Their lockdown because of COVID. Very fortunately, because of COVID when it originally hit, and China went into their lockdown and the United States went into theirs, we were already able to try to accommodate, not fix, but accommodate and bring back some of the manufacturing and supply chain issues back to the United States. But it wasn't fixed completely, right? And just when you thought that COVID was no longer going to be a problem, now you're going to see, in my opinion, how it's actually going to negatively influence our CPI data because of the concern with the supply chain issue, because their country, or most of their, or China, is in lockdown because of COVID. They had their second wave of COVID. They went into full lockdown, making it difficult for them to resume to business as usual. Again, when asking what are the major factors that play into our CPI data, transportation, housing, what has happened in the past month? Oil prices have gone up, making it more expensive for travel. The overall consumption of oil, right? It eats up into their margins. Housing prices, right? Overall housing. Interest rates are higher, right? Taking that all into consideration, I can easily see why everyone as of right now is concerned about the report that's set to be released tomorrow. So, when asking has inflation rates peaked? No, right? But I think that addressing this also really puts things into perspective of, when the Federal Reserve is really trying to fight back inflation by raising interest rates, you can see that they're really just trying to do their job, right? I see a lot of people always badmouth the feds because now they're just trying to catch up with all this inflation that has taken place. It is what it is at this point. I just wanted you guys to be aware of how to make sense of tomorrow's data a little bit more. This is my first time ever trying to explain the CPI data. I probably did maybe a horrible job. I really hope that it makes sense to you guys. It makes sense to me. I like tracking it month after month. I have a very simple way of tracking it. I just like to understand why. And I think that you guys are all probably in the same position, right? Where at the end of the day, we have no control of how this data gets released, and we will all become aware of what that CPI data is tomorrow. But it's nice, right, for those that partake in the stock market and for those that want to stay up to date, that kind of understand what that CPI data is made up of and how month over month it continues to change. So if I can do a better job, if you have specific questions about what I talked about today and you would like me to elaborate, please just comment down below. So I'm very excited for tomorrow's report. We're going to be making sure that we trade it tomorrow during our live trading session and just waiting for the market reaction, right? I'm hands off. I'm very excited to see if the market goes up, if the market goes down, and if so, right? Make sure that if you're part of my Learn Plan Profit group, that you set your alarms for market open, because it should be, right? An interesting trading session. I don't want you guys to miss out on this one. If you guys are tired of missing out of our live trading sessions, we've been absolutely killing it. I would love to invite you, right? I'm going to put a discount link, $50 off the Learn Plan Profit 2.0 lesson library. You don't have to sign up, but again, if you want to work with me on a closer basis, if you want access to my daily live trading sessions, then again, I only work with the Learn Plan Profit group. And again, that's that second link in the description. So make sure to set your guys' alarms. I hope that it earned a thumbs up. Please consider subscribing to stay up to date with my market updates. And like always, let's make sure that we end the year on a green note. Take it easy, team.